Most homeowners are walking straight into a tax trap that the IRS quietly set decades ago. And the worst part is, you probably don't even know it exists. We're talking about a hidden recapture mechanism that could cost you tens of thousands of dollars the moment you think you're finally getting ahead. Here's the setup. You bought a home, life happened, and instead of selling, you decided to rent it out for a few years. Sounds like a smart, flexible move, and honestly, it is, until the IRS shows up to the party uninvited. The government has this rule that says your rental property depreciates in value over 27.5 years, which means you're entitled to deduct a portion of that value every single year against your rental income. Here's where it gets wild though. Even if you never once claimed that deduction, even if you left money on the table every single year, the IRS assumes you did. Think of it like a tab at a bar you never ordered from, but they're still charging you when you leave. The technical term is deemed depreciation, and it doesn't care about your intentions, your paperwork, or your blissful ignorance. Now here's where optimism turns into a gut punch. You convert the rental back into your primary residence, live there for 2 of the last 5 years, and you think you're golden under Section 121, which lets married couples exclude up to $500,000 in capital gains. You're feeling like the smartest person in the room, and then your accountant calls. Section 121, as generous as it is, cannot shield you from depreciation recapture, full stop. That recapture gets taxed at a maximum rate of 25%, and it is completely walled off from the exclusion like it's in its own little penalty box. We've seen this pattern repeat itself through every real estate cycle going back to the Tax Reform Act of 1986. Smart people, good intentions, painful surprises. The IRS has been collecting on this rule quietly for decades, while homeowners celebrate what they think is a tax-free windfall. The misconception most people carry is that living in a home long enough simply erases any rental history from a tax perspective, which feels logical but is almost impressively wrong. Depreciation recapture doesn't fade with time. It waits patiently, like a bill you stuffed in a drawer. So what do you actually do about it? The most elegant legal move available is the 1031 exchange, which lets you roll your rental property into another qualifying rental property and defer, not eliminate, defer your tax liability. You keep the momentum of your wealth building without handing a chunk of it to the Treasury on the way out the door. The discipline here is critical though. You have 45 days to identify a replacement property and 180 days to close. And the rules are strict enough that one misstep collapses the whole structure. This is not a move you make casually with a YouTube tutorial and a prayer. Historically, investors who treat the 1031 exchange as a long-term portfolio strategy rather than a one-time escape hatch are the ones who build real generational wealth. The recapture problem never goes away, but with each exchange, you're essentially kicking the can further down a road you control. The broader lesson the real estate community has been slow to absorb is that tax strategy is not a finishing move. It's a foundation you build from the very first decision. The people winning aren't smarter, they're just earlier in their planning. At the end of the day, being comfortable with any outcome means you've already done the work before the outcome arrives. You've sized your position, you know your exposure, and you've made peace with a range of results. That's not pessimism, that's professionalism. Discipline, proper entity structure, and honest conversations with qualified tax advisors will always outperform the fantasy of a perfect tax-free exit. The trap isn't the IRS. The trap is assuming the rules don't apply to you until they do. Whether you're thinking about converting a property, planning a 1031 exchange, or just trying to understand what you've already walked into, check out our links in the description below. We can help you connect with real estate investors, contractors, and lenders who actually know how this game is played.